afternoon, everyone, and welcome to Stock Market Today. You have Melissa Corum and Justin Nielsen here to break down the market action. After last week's pretty wild week there, Justin, a lot of action underneath the surface. What are we going to highlight today?
Well, we'll take a look at some of where the strength was, and that's really in energy and materials. So we'll start out with Cameco, if you want to go nuclear, Devon Energy, if you want to stick with your fossil fuels, and then we'll also take a look at Cleveland Cliffs and, just ask the question, is this the leading steel producer or should you look elsewhere?
All right. Well, we will aim to answer that question. First, a look at the NASDAQ 100, which is tracked by QQQ, the ETF here, down about 0.6% for the day, Justin, while the NASDAQ composite was down 0.4%, the S&P down about 0.25%, the Dow down 0.2%, and the Russell eking out a gain today. So what do you think about the overall market action? Big tech still looking weak, even after a bit of a boost towards the end of last week.
Yeah, and I mean, what I do like about the way we finished is that we did close well off the lows. I mean, it looks like it's pretty near the I would say like in the upper quartile of the trading range for the day. So that's good, but tech just does not seem to be where it's at right now. And so you just have to be aware of that. The S&P 500, if you go ahead and flip over there with SPY, which is the spider ETF that tracks the S&P 500, that one, that remained inside of Friday's action, maintained itself above its 21-day moving average line, whereas the Qs are trying to still get back above that line, trying to get back above its 50-day line. So the spider, the S&P 500, just looks a lot stronger. And again, when you look underneath the surface at what some of the areas are that are showing strength, I'm looking at my screens and it's a lot of oils, materials, and some retail and stuff like that. But it's not really in tech. That's not what's coming up on my screens a lot. And so you just have to go with what's working. When you look at relative strength, that's the relative strength is in all of those other areas. That's where the setups are, and so that's what we're focusing on. I should mention that IWM, the Russell 2000, just to take a look at the small caps, that one actually did end up closing positive for the day, not by much, but again, it was well off its lows. Still, that needs to get back to its 50-day moving average line, get back above there, and get a little bit more decisively above its 21-day moving average line.
Yeah, that would be great to see. But you mentioned the areas that are working. So let's take a look at some of that. CCJ is squarely in our sights, gaining about 3.5% today after a breakout last week. Although it may have shaken out some people along the way, it is back in the buy zone. What do you think?
Right. And you and I talked about this on this show a few weeks back, and we were talking about some of the uranium plays with ETFs. But if you want to go with a single stock, CCJ is definitely one of the leaders. Something that you can easily trade on our exchange. This is a Canadian company, but it's an ADR, so you can easily trade it on the New York Stock Exchange, no problem. And one of the things, this is actually something that we put on as stock of the day today. So Bill Peters wrote a really nice article about kind of what's going on underneath the surface here. What's going on with nuclear subsidies potentially out there. If you're a uranium miner, that bodes well for you. And there's going to be a lot of this talk about going clean, reducing the carbon footprint. Nuclear is still one of the best ways to do that. You get China involved in this, and and them increasing their nuclear power production. That's going to require uranium, and so Cameco is really poised to benefit from that overall trend. So it's not necessarily about looking at the numbers right now. In terms of the fundamentals, the earnings growth, the sales growth, it's really about that projection. In fact, I think when their earnings came out, Ed Carson noted how, hey, they didn't have production, and it just didn't seem to be a problem, right? The stock, is still kind of looking forward to what's down the pipeline.
Exactly. And that relative strength line is looking pretty
Yeah.
good here with the stock in a buy zone. So, underscoring that outperformance, which is what we want to be focusing on.
Right.
And you mentioned oil and gas also being an area of strength. So, here is Devon Energy, ticker DVN. It's had a nice streak of weekly gains as it recently broke out of a cut base of its own. And what do you think about Devon? A kind of a similar chart, actually.
It is actually. That was one of the things. You took the words right out of my mouth. That was something that I actually mistakenly thought that I had moved on to a different one when I was going through the list today, and I hadn't. It looked very similar. So again, just looking at my screens today, oil and gas was one of those areas of strength. So whether or not you were looking at the broader energy spider sector fund, which is XLE, that was, I believe, yeah, that was up 2.2% today. So that was top in terms of those select spider funds. But a lot of times I've been looking at, more specifically the oil and gas explorers. That's with XOP that you could be looking at. You could be looking at the servicers. That's OIH. And a lot of these look very similar, right? It's formed this kind of cup with handle, and now it looks like these are poised to break out. So you've got a lot of these stocks that look the same. And Devon Energy, getting back to that one has that same look, has a lot of strength. And if we can go back to the weekly, when you get there, one of the things that I liked about, we were actually discussing this, we put it on leaderboard, and one of the things I liked about this base pattern was that on the weekly chart, you can see that there was a dry up in the volume and on its way down, and then some of that volume started picking up on the way up. And yeah, sure, you could say, oh well, it's still below average, but look at the comparison, of what it did on the way down to the comparison of what it did on the way up. Now, the start of that base did start out with some, pretty heavy volume on the downside, but again, when you compare it to the positive volume just a couple weeks before, you're seeing a lot more blue on that volume than you are on the red. And so I think that speaks well for this one. Again, the relative strength line is looking very strong. It's in the right area. And, for as much as we might be talking about reducing the carbon footprint, going nuclear, look, fossil fuels are, they're not going anywhere anytime soon. A lot of this stuff in terms of clean energy is going to take a while. And so, fossil fuels are still going to be around for a while.
And so with a stock like this, and really this whole group that has seen such a notable move since last November, this is the first full-fledged base, that a lot of them have been forming, and we're now seeing breakouts. Can you talk about the significance of that?
Well, and strangely enough, this is one of the things you actually want in a lot of your stocks. You want them to be hard to get into. The ones that play hard to get are usually the ones that are worth having the most. And so the fact that it didn't base, that it was so strong that it just didn't want to take the time to base. As much as we love bases because that gives us the opportunity, some of your strongest stocks won't give you that many opportunities to get into them. So Devon Energy and a lot of these oil stocks have now kind of put in a base. The strength is coming back in. Their pause was really temporary, and so I think this is one of those opportunities you could be looking at getting into some of these plays, whether it's through the ETFs or through some of these individual stocks. But you do have to be careful because, as we were talking about on IBD Live today, commodity plays are tougher. That it's you've got a company that's levered to a commodity. That commodity is prone to. I mean, with oil stocks, I mean, you've got inventory amounts, rig counts, all of these things that almost act like earnings announcements all the time, multiple times during the week. So that can always shift things. And so you just have to be aware of that. They can be a little bit more volatile and a little bit harder to play.
Yeah. Great to point out. And speaking of something that's hard to get into, a number of steel stocks have been. So let's give our assessment of that group. So let's take a look here at CLF. It gained 7% today. So that's pretty solid. It had a good test of its 50-day moving average not too long ago, good relative strength rating, but it comes from such a strong group, Justin, that Cleveland Cliffs isn't the exception in this steel producers group. There's a lot of strength coming from this area.
There is a lot of strength. And so as much as, I mean, that percent move today really, kept on jumping on my radar. And this is one that I've been watching as it was basing in March, actually, because this is where the correction was happening. The relative strength seemed like this was holding up pretty well on Cleveland Cliffs. And, then when it had that breakout, but then after the breakout, it kind of took a while for it to get traction. And so now, this was kind of getting on my radar because it had this, another pullback here, and today's action looks strong. But as opposed to Devon Energy that we were looking at, you look and you see that there's a lot of spikes on the red side lately. Today's volume wasn't that impressive compared to that. And you're also looking at some of the other players in this space. Nucor and Steel Dynamics are two that jump to mind. Symbol NUE for Nucor. I mean, look at this one. You want to talk about hard to get into.
Exactly.
While Cleveland Cliffs has been, kind of, mulling around here, this has just been going really strong. And, this, like Steel Dynamics, had this really kind of nice little consolidation and broke out there around earnings and just never looked back. You look at Steel Dynamics, and it's kind of a similar story. It just had not as strong of a move, but a very strong move here as well after it consolidated just for a little bit. Again, not even enough to really call a base.
Exactly.
But then once it broke out after that, it had the strong move, and it really held on to those gains. Usually when we're trying to get into something, we want it to pull back to maybe the 21-day or the 50-day. These aren't even pulling back, basically to the 10-day line. So again, that just kind of goes to show you what kind of strength there is. So just be careful of getting into the also rans, the ones that are a little bit late to the party, because those are sometimes the ones that are left with cleanup duty.
Right. So it sounds like CLF might be in that category. But the good thing about having a very consistent routine, no matter what the market conditions are, is that that allowed us to really strike when these opportunities presented themselves. And the window isn't very long at all for a lot of these.
And this is why even, look, this market has been a lot tougher. So for anyone that entered in 2020 and you're like, wow, this is easy, and I'm so smart, which again, I've been there. I started in the late 90s and can't believe, you would not believe the ego I had on me when I was going through my initial learning stages. But now that we're getting into a tougher market, this is where that discipline comes in. I was listening to a podcast today, not today, but yesterday, talking about consistency versus intensity. It's one thing to be like absorbed in it, and especially when a lot of people were staying at home, it was easier to happen. But you really need that consistency, that consistent analysis, that you're doing every day, even in the tough markets. It's not necessarily that you're going to be doing something every day, but you should be looking to know what's setting up, what's moving. And so that way, when it is time to act, you're ready. You've done your homework ahead of time.
That's exactly right, Justin. Thank you for that. And thank you all for watching. We're going to continue the conversation tomorrow morning on IBD Live. So we hope you tune in, investors.com/IBD Live. That's it from us. We'll see you tomorrow.